Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today, we're talking about commercial real estate development. Please welcome my next guest, Conor McNally, Chief Development Officer with Carter. Carter is a national real estate investment, development, and advisory firm founded in 1958. Conor, thanks for joining us today.
Great to be here, Michael.
Well, we appreciate it. And, you know, everyone hears that development is back, that people are building again. You guys have been building since, the 60s. So how busy are you today?
Well, they're right. Development is back. We are busy. We're busy, and that's a good thing. We're busy probably in different ways than we were pre-recession. Our sort of big two focus areas right now, or big hot sectors, are off-campus student housing and walkable urban multifamily. We're finishing up, or just have finished up, 3 large projects. The last phase of a multifamily project in Jacksonville, Florida, a 750-bed student housing project at Ole Miss, and a 300-unit urban multifamily project in Columbus, Ohio. We have 3 more projects under construction: student housing project in San Antonio, Texas, a large student housing project in Ann Arbor, Michigan, and totally took a blank on what the third one was. Sorry, a 235-unit multifamily project here in Atlanta.
Okay. And are those fee development deals, or are those private investment with Carter?
Those are private investment deals with Carter. Historically, we've had a balance in our business between program management, or owner's rep development, and then principal development that we do ourselves. We have shifted that pendulum much more towards the principal or equity development side. So that's where probably 70 or 80% of our activity is right now. But we are still very focused on program management, have 8 large education projects going right now. Okay. So in total, we've developed or delivered over $650 million in projects since 2011, and have about $325 million under construction right now. So.
Okay, well, that's great to hear, and we need the jobs, right?
Absolutely.
So you're bullish on student housing. What other sectors are you bullish on?
Multifamily, so urban apartments is I would say the hottest sector, the most bullish sector that we see right now. The demographics really are pushing for that, with the millenniums coming through. Lots of focus on urban infill. People want to be walkable, so less sort of traditional garden style product, much more urban, walkable, transit oriented, smaller units. So that's definitely a strong sector for us. We're still seeing some office, some hotel, but definitely the residential sectors, apartments and off-campus student housing, are much more active.
And those apartment projects that you've built lately, they're still leasing up pretty quickly?
Yeah, they're leasing up extremely quickly. We're seeing great lease volume. Pricing is very, very good as well. And then on the investment side, we recently sold a major project up in Cincinnati, and we're seeing strong cap rates and strong investor interest as well.
Okay. Now, you said you've done a lot of fee development over the years, and you've done some public-private partnerships. What have you learned with public-private partnerships? What are some of the important factors today, and is there much demand for those type of projects today?
Yeah, I definitely still think that there's good demand for them. We've have 2 large public-private partnership programs going up in Ohio right now, a major project in Cincinnati called the Banks, and we've just delivered or are delivering a project in Columbus, Ohio, which is public-private as well. They do tend to be pretty complicated. It can be tough to work with public entities, particularly if there's a lot involved. I think the keys to it are to have, from the public side, for there to be simplicity in the way that the deals are structured, flexibility so that there isn't just one way to set up the deal, and really the most important thing is transparency on both sides. It's important as a developer to understand the rules of the game, to understand the way things need to work, but it's also very important for the public body to have transparency from the developer and not to think that it's a constant negotiation of how much subsidy is required. So the more flexibility and openness and transparency there is in the process from the start, the more successful it can be.
Yeah, that's a good point. And you guys Carter, have done a lot of mixed-use developments, and I'm interested to hear from you, since we've just went through a downturn and a recession. What have we learned through that recession about mixed-use projects? What have we learned from that?
You know, I think in the development community, we've learned that there's a lot of complexity there, and you've got to be very careful at the way you execute and structure the deals if you want to be financially successful with them. And
we do, don't we?
We do. We're in business to make money, and
That's
so
right.
we like to do that. Oftentimes, you'll see a development that can be very successful for the users, in terms of great vibrancy and a great mix of uses. But from a design and execution perspective, you've got to be very careful to make sure you're not overcomplicating things. Vertically integrating lots of different uses is something that's been shown to be very costly and can hurt the financials. And then structuring the deals in a way where, particularly post-recession, on the exit side, investors tend to want to be more focused on a particular product class. And so the group of investors who would want to buy a large mixed-use project that has lots of uses and an income stream that's split between all those uses, that's not a huge buyer pool. You tend to get investors who want to be focused on one sector and one area. And if you're doing a mixed-use project, structuring it so that you can separately sell the pieces to investors who are focused in that segment and that sort of core area leads to just a smoother and a better exit.
Right, that makes sense. An apartment owner knows how to handle apartments, and a retail owner knows how to handle retail. That makes a lot of sense. All right, we're going to take a quick break here. We'll have more on the development market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about the U.S. development market. We're talking with Conor McNally with Carter. And Conor, I'd like to have your advice that you would give city planners or zoning people in the cities and maybe developers who are trying to attract development to their city. What would you tell them?
The old acronym KISS, keep it simple. I'm not implying anyone's stupid, but keeping
silly.
It simple.
Keep it silly. Keep it simple, silly, right?
That works better. But yeah, oftentimes you find that the process, both in public-private partnerships, but also just in the general development process, it can get very complicated and very costly. And time and complexity cost a lot of money as a developer, particularly when you're in a pre-development stage and you're taking a lot of risk. So having a very clear and transparent process that isn't filled with excess fees and hurdles and steps that then have to be offset by subsidies or TIFs on the back end to try to attract folks. It's a lot simpler and more straightforward to have a basic, straightforward process that's simple to get through, that doesn't have a lot of built-in fees, and then doesn't require lots of difficult to achieve taxpayer subsidies to encourage development.
You make it sound so simple.
It can be. It can be.
It can be.
But just the process of stepping back and analyzing and getting feedback is a step that a lot of cities don't take. But the few that do come out with a much better product in the end of the day.
Well, as we've heard earlier in the show today, commercial real estate development is a big part of the U.S. economy. And Conor, you're on the forefront of development. You're seeing it every day. What do you expect moving forward in 2014 and moving forward for development volume?
We see development volume continuing to grow nicely. It obviously is different sector by sector. The couple of sectors where we're active in off-campus student housing and urban multifamily, we see continued growth in those in the coming couple of years. The student housing sector is interesting in that it has had huge growth in the past 5 years, has become an institutional asset class where it wasn't before. And so it is possible in that sector that certain markets, it's a lot of little markets. There could be some supply-demand imbalance there or saturation, if you like. Less so on the urban multifamily side. We see good strength there. Still have to stick to real estate fundamentals and have good projects well located. And then we do see office volume, growing and starting to do better, but not as strong as I think the residential sectors will show.
You expect much mixed-use development moving forward?
Yeah, again, I think we'll continue to see it, but I think we'll see it, maybe not in some of the very large and grand mixed-use projects that you've seen in the past. More compartmentalized, a little bit more focused, and hopefully, better structured.
Okay. If a listener has some land out there or a project to bring you, what kind of things should they bring you?
They should bring us really cheap, really well-located land in great cities.
Right.
We'll buy that all day long.
All day long. And what cities?
We're focused, we're headquartered in the Southeast, and so the major markets of the Southeast are our bread and butter. Atlanta, Charlotte, Nashville, Florida markets. But we also are very active in the Midwest. We're active in Texas now as well. But we're not afraid of complexity. Complex urban sites that need a little bit of creativity, a mix of uses. Oftentimes doing things like shared parking arrangements. That's something we've done quite a bit recently, and more cities are embracing. So those are the types of areas where we see a lot more activity.
Okay. Well, Conor, thanks for joining us today. We appreciate it.
No problem. Enjoyed it.
If you'd like more information from Conor, visit carterusa.com. Well, can you join us next week? We'll cover the U.S. office market. Thanks for joining us today. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.